Okay, so nice. So actually, let's dive into this session. And let me share the entire screen. Let's go like this. Yes, so we go like this. And straightforward, let's go to the very beginning of the session. And as I said before, today we are going to see what we call the right look in the Forex market. And also we'll be covering the concept of optical illusions in relation to market structure, because now optical illusions may happen even on other things now, on other objects, but specifically we're going to see optical illusion in relation to the market structure. And the final thing, or the last thing, will be looking on what we call the concept of see the unseen. We'll be looking on the concept of see the unseen. So actually that will be another thing which will be very important. That will be another thing which will be very, very, very important. So actually, I'm trying to make things here. Let's do this. I'm trying to do something here. Okay, screen, show presenter view, black screen or anything. Okay. But I want to hide the notes, but okay, no problem. So actually, we're going to see what we call the see the unseen. That will be like another very important part in this discussion. So now the first thing, let's think about why, if you are 2 or 3 traders, sometimes you're looking on the same chart, you will end up having different conclusions. Now, everyone will have their own formation that they can come out with it, by looking on a Forex chart. So why that happens? Yes, so the most important thing is just you must understand that the difference now between 2 or 3 traders looking on the same market chart is just the perception. They may be analyzing the market by using the same technique, but their perception may be different. So that will be one of the main things that will make difference between the outcomes from those 2 traders. And now another thing is, now how many times, now we have to try to think of how many times have you been analyzing the market and then you end up losing a trade. Now you have analyzed, you have identified the clear direction, but you are losing a trade. Now what happens? So that is another thing that we're also supposed to think about it. And we'll be having a conclusion today. So this is about the idea of direction and timing. So sometimes you may analyze the market having a clear direction, but taking trades, now entries, is the matter of timing. It is the matter of timing. So sometimes you may fail on the part of timing, so you'll end up losing a trade. So also we'll be covering today on how those things are going. They must go in a right way. So now, today is not about something new. It will be about seeing what has always been there. So we are going to open an eye that will help us to see something that has been there always, but we were unable to see it because now our third eye was closed. So today is just about perception change. It's not about learning new technique. That is how even our schedule was saying. So outcomes, we expect every trader to be able to just see the market in a correct way. And this will be by understanding a complete market structure and also learning how misinterpretations happens. Those are the 2 purposes that we expect now. Every trader, after having all these 2 things, they will be able to see the market in a correct way. And also the outcomes, we expect by the end of this session, every participant will be able to identify whether price is in impassive or corrective. Also to avoid common visual cognitive traps. That's the idea of illusions, now the optic illusions. And everyone will be able to apply a clear checklist for the right look. So at the end of the session, we'll be also seeing on a checklist that may help us to decide when to take trades. Okay, so now the core concepts actually about this session is that market does not change, only our perception changes. So when you look on a chart, maybe in the morning, you analyze and all the stuff like that. Sometimes you may maybe clear all the drawings. Then when you analyze again, maybe in the afternoon or evening, you may come up with a different idea. So it means now your perception has changed, but the market has, or the market charts has just remained the same. And also the market never hides the truth. It hides behind perception. So everything is about perception. Market never hide the truth. Market never hide the formations or the structures. Okay, so let's go straight. So let us start with the concept of market illusions. The optical illusions. So on the concept of optical illusions, I needed a pen here, but it's not working. So now on the concept of optical illusions, it is all about accurate data. Now the eye always receive accurate data, but the brain misinterpret those informations. That is where illusions occurs. So it means now those informations are correct, but what the brain gets now or understands is something which is not correct. That is where illusions occurs. And everything is because of perceptions. So this usually, that misinterpretation usually change with the perception. When you change your perception, always misinterpretation also changes. So now this is the same thing with the charts. Even with charts, always those illusions disappear due to change of perspectives. Even the market charts, if you were just wrong in the market charts, always the correct formation can be restored if you change your perspective. And in that way, you will find that now higher time frames, impasses versus correction, position in the cycle, those are the context that can help you to get a correct meaning of the market formation or a wrong meaning if you are not prepared. So for example, we have this drawing here. Now when you look on this drawing, what do you see? What meaning do you get from this drawing? What meaning do you get from this drawing? Okay, so basically, from the drawing, what you can see there is just, for the first time, you may think of this is just a middle section of a woman, like a torso now. It is an incomplete drawing. That is the first thing I hope everyone can see. Then looking on the other ways, if you concentrate and look deeper, also you can identify that it's like two individuals dancing. It's like a drawing of two individuals who are dancing. That is another thing. So now the diagram has remained the same, but interpretation has changed based on how we are looking at it. And also someone may look at it and say, oh, possibly it is just a single maybe object, but on the other end, it's just a mirror image. So that is also another way someone may think of this drawing. So we have many interpretation of the drawing, but the drawing remains the same, but our interpretation, our perceptions may change the meaning behind this drawing. So this is similar to the market charts. When you're interpreting the market charts, sometimes you can get more than one interpretations from the same chart. This is acceptable. So always this is acceptable in analysis. So nothing is wrong by having more than one meaning from the same market chart. Okay, so yeah, from there we see those interpretations are there, but no problem at all. So let's go. So now parallel with the market structure, we see optical illusions, and also we have the market interpretation. Now same image, different perceptions, the same chart, different counts. For example, for those who do the wave counts, but even for charts, maybe triangle or anything, someone may see triangle on the same chart, but another person may see a different structure or pattern. So that is common and is possible. And also context changes perception. So for example, time frames changes the structure. When you are looking on the market chart, sometimes moving from one time frame to another may help you to recognize or to identify something that was not clear in one time frame. Then brain feels misinformation. Traders forces wave counts. So the misinformation is when someone is forcing like to have maybe a 1, 2, 3, 4, 5 while it's not exactly existing there. So those things are also possible in the market. So now the key concept here is price is objective, but structure is subjective. So that is very important. Price is objective, but structure is subjective. So now when you are saying objective and subjective, that's very key thing to understand as a trader, because this is very applicable in your trading. So as we proceed, let us see exactly when we are saying price is objective and structure is subjective, what does it mean and how it is applicable in the market. Okay, so basically objective, it means something that cannot be argued. So something that is now correct or right. There's no way we can discuss about the objective thing. So for example, a candle close at a specific price, that is objective. If maybe on gold, candle closes at 4,000, it means now everyone will see that. And now we cannot argue someone saying like, it's not 3,000, it's looking like 1,000 or something else. No, it will remain like that. So that is objective part of the market charts. High or low, open or close, all these stuffs are the objective parts of the market. The subjective parts is something that depends on perspective. It depends on how someone will understand things. So it means now this varies from one person to another, and even from the same person, if they change their perspective, also the same thing may look different. That is what we call the subjective part. So for example, wave counts are subjective. Sometimes you may count this as an ABC, at the same time you may look at it as 1, 2, 3. So those things happens. Support and resistance, everyone have their own ways of drawing this. Sometimes you may draw a support and resistance and agrees that this is the very stronger level, but next time you may come and tweak it, switching it to a new level. So those things happens because your perspectives has already changed after some time. So now at least now you have understanding of what objectivity and subjectivity in the market looks like. So here is an example and everything is very, very clear. So now from maybe giving an example from our image, we had an image there. So from our image there, those lines, they were just fixed things. They never changed, but our perception changed. So lines remained the same. So those are the objective parts. The dots, we had some dots looking like breasts or heads if you look on the other ways. Those were the fixed parts. The shapes, they were fixed now. That shape of the drawing was fixed. That was the objective part. Now, but our interpretation was subjective because sometimes brain decide what the image is. Different views see different realities. Both interpretations feels correct. Nothing is wrong with that. So just like illusions disappears when we change perspective, bad counts, maybe the wave count disappears when context is restored. So those things happens, as I said at the beginning of this session. So why traders see market differently? So why traders, when they look on the market, they feel like, this one is this, and when another person look at it, they see a different thing. So now they see different structures or market formations. There are different reasons, but some of them are here whereby sometimes someone may hold a previous meaning of the market chart. So if you go with the previous meaning of the market charts, at the end of the day, you'll end up forcing things. If you previously hold the meaning of maybe an uptrend, so it means when you analyze a market, you'll end up forcing things to go into the uptrend. So even if maybe the market at the current maybe time frame is looking different, the trend is different, but you'll be forcing things to look like that. So that is holding the previous meaning. Emotional involvement, sometimes you have emotions, sometimes pressures from the groups. Now maybe someone in a group has posted a certain information or has shared a certain entry. So sometimes with those emotions, you can end up analyzing market in a wrong way. And zoom level, that is time frame relation, that is very important. So zoom level, now zooming in, it is more prone to illusions. When you zoom in, you'll have more details, but it is prone to illusions because the information will be limited. So illusion is not the data, it's the interpretation of the data. Therefore, price is real and structure too, but structure can be misinterpreted. That's why when we're looking on objective and subjective, we saw structure, market structure is subjected to illusions. And then market data like the closing, opening price, the high of the candle, the low of the candle, they are objective. So they cannot be misinterpreted. They are just a very straight thing that you're just supposed to understand. So why this matters now, having those different interpretations, so this is very interesting part. If structure were objective now, if market structure were objective, now the trend lines were objective, everyone will trade the same way. So it means everyone will see the market the same way. So now market will not function. So why market will not function? Because in order for the market to function, we need to have traders trading in opposite direction. Someone is buying, someone is selling at the same time. So that is the very interesting part of the market, and that's what makes the market work or operate. So without this, market will never operate because everyone is looking for buy. So who is going to sell to them? To whom are you going to buy? Everyone is looking for buy. To whom are you going to buy? So we need someone to understand that market is selling and another person to understand that market is buying. So from those two different understanding is when now market is operating. So when you are placing a buy, it will go and match someone who is placing a sell on the other end. That's very interesting. So that's good. Let's go on. So Elliott wave structure, clean and practical. Now, this session was not that much specific to the trading techniques. It was the perceptual change. So I'm not going to go deeper into this. So basically, for those who know Elliott wave, they can read clearly how the market positions now in terms of waves carries a certain meaning in terms of perspective. So we have those things here. So now always we have the concept of the right look for the impasses. Now for those who do the Elliott waves, we have something very important when you are doing market analysis by Elliott waves, something which is very important. It is direction clarity. So direction clarity is, you look on now several things to confirm your direction. So you look on price structure, you look on behavior. Behavior all point in the same direction. You need to see several things now running into the same direction. That is when you really understand that, okay, this direction has been confirmed. Limited overlaps now for impasse. Impasse, when it is an impasse, it means now there will be limited overlaps. It is now different from corrections. Then momentum expansion, you will see momentum increasing when it is an impasse. So those things happens. So now in corrective waves, they are like the opposite of the impasse. You will see overlapping, you will see momentum in most cases can be less than the impasse. Yes, so those things like the time consuming. So this is the very important part for the right look. If you will look on the market and conclude that this is corrective pattern, another thing to identify is time consuming. Correction, they are taking longer to get completed. So that's very important. Now see the unseen. That's a very nice part. See the unseen means not reacting to visible noise, interpreting the invisible structure beneath the price, understanding what the market is preparing, not just what it's doing. So it means now when we are saying you are able to see the unseen, it means you are now at a very conscious level, at the highest conscious level of understanding of the market. So it means now you are able to see things that are not exactly happening by that time. You are seeing things that market is expecting to do. So how? We have principles. We will see how those things are possible. Okay, so now from an image, when we are talking about the see the unseen, now what I can say, from that image we were looking there, if someone interpret that market just by only understanding a single formation, they will believe in that. But the image has got hidden meaning. Like if someone sees that is only a female middle section, the torso, while someone may also see there are two objects dancing. So it means now when you are able to see the second meaning, so you are able to see the unseen. You can also see the third meaning, maybe the mirror image. It means you are going deeper into the see the unseen. This is very applicable with the Elliott waves, whereby we have what we call the alternative counts. You will have the first count that meets most of the rules and guidelines, but you need to look on any other possible counts that are applicable. That's very important. Therefore, the right look is not choosing one image. That's the conclusion. Like how we saw on that image with an optical illusions, and we have agreed that even market charts, they exhibit the same thing, the illusion, the optical illusions. So that's why we are concluding the see the unseen is not choosing one image. It is knowing now when to change the way you look. You see? So from that image we're looking at the beginning of the session, it might be an incomplete image. So let's say you understand it as two objects dancing. Then once the image is getting completed, you find that you see the legs, you see the neck, the head. So it will be now something different, like, no, I thought there were two objects, but I see it's just a single human there. So it means now you will set your limitations of understanding that these are two objects. But if this is going to happen, I will change my perspective. I'll understand it in a different way. So that is what we call the highest level of see the unseen. So optical illusions, analogy applied. So we are looking like the relevance of the optical illusions. So zoomed in charts, illusions prone, as I said before. When you zoom in, you are most likely to encounter illusions, optical illusions. So clean charts appears when you zoom out. What does it mean? Now, in relation to market charts, for example, higher time frames, they are now when you can see market clearly. When you go to lower time frames, it is like you are zooming in, you are getting more details but less information compared to when you were in higher time frames. So for example, look at this image. What do you see? Now, straightforward, one person may feel like I see like sands here. I see like these are like the waves. Then I see like an ocean here, and finally the sky. So that's how you can primarily interpret this. If you have another view of this image, you are good. It means you are able to see the unseen. You are good now. You are able to see the unseen. But primarily you can see this. But now what is the meaning behind? Isn't even the beach. It is just a section of a car, just a car door that has cracked below here. And here is just the sand beneath the car. Do you see now? So this happened because of zooming in. You went into more details, but you lost informations. When you have more details, the information are getting less. That is what happened here. The same thing happens with the market charts. When you get deeper into the market charts, you are losing informations. That's why you must know how to connect the higher time frames and the lower time frames. That is very important. Okay, so in the context of the car above, we have done. Let's go on. We have the idea of the multiple time frames. As I've said, the higher time frames, reality, you see everything. And actually you get what we call the context. When I'm saying the context, it means you get multiple informations. It is not just one information. So you get multiple informations that can help to give you the clarity of the direction of the market. Lower time frames, actually they are for execution, for putting trades now. If you already know the direction, you can now go into lower time frames, look for the correlations between those time frames, then you place the trade. Okay. Then we have spent 26 minutes and the target was 45, so we're still on time and we have left with just 6 slides. So specific market examples, and I don't need to go with this one. You will read it, but I can just simply explain with the first one for the impassive waves, wave 3 now. Strength before visibility. So for example, if you are able to see the unseen, for wave 3, you must be able to see that power of the third wave. For those who know the Elliott wave, you must be able to see the power, the strength of the third wave before it happens. How will you be able to identify that? You will see small pullbacks. Pullbacks are very shallow during wave 3. You will see price moving fast. Moving fast yet. It means now at the very beginning, before those things happens. What is this is what you see. So what has the unseen? Shallow wave 2, momentum holding above the key Fibonacci. It means the shallow retracements, the same thing. Market refuses to correct deep. So it means now market is holding power. It's not going deeper in correction. The light rook interpretation, the market is accepting higher prices. You always see things that are not already happening. You see market is showing all the potentials to go further. That is the idea. The illusions behind traders believe nothing is happening because market will be doing like small movements, the sharp movements up and down. But for those who are able to interpret the unseen, they'll be able to see that market is getting ready for the potential bigger moves. I'll not be reading other examples here. Those are the things that you can go about them yourself. The common mistakes are explained as the value traps, overcounting. Sometimes people, they think now overlapping the market charts with the labels is going deeper, but always you will get lost. So make sure that you just highlight the key levels now. In wave counts or drawing the trend lines, sometimes people draw the insane trend lines overlapping each other. You see hundreds of lines on the chart. That is a mistake. Bias toward one count, sometimes that we call a fixed elation. You just stick into one thing. Market is invalidating, but you still think this is going to happen in the future. No, you must be able to switch at some points if you think things are not operating in the right way. Ignoring invalidation, that is one. I mean, another thing that is related with what I have already said. So it is the same as refusing rotating the image. Yeah. So now when you just see market is invalidating, that's why in Elliott wave we have something we call the invalidation. We have a certain level. If market goes beyond that level, you will say my count is invalid. Psychological discipline, be willing to relabel. Then you have to detach the self-image from analysis. So there is another principle that says sometimes traders may want to see, they will be forcing now to see what they want to see in the market. You open a chart, you want to see a triangle, actually you will see it. Because you are going with the perspective of seeing a triangle into the market. So you will see something that is actually not there. So that is a problem. That is a psychological problem, a discipline. Sorry. Yes, so we are going to the very final part, the checklist. This is just some, but we may have many things, but it's better at least you frame your checklist based on this. Before you take a trade, in order to have a right look and see the unseen, make sure at least you observe, is market in an impasse or correction? You must understand what price is implying, not displaying. It means you see something that is not happening. You see something that is expected to happen. Very important. You see the unseen. Also, is momentum expanding or compressing? That is very important. You will understand those things. Actually, because the session was designed to be very short, even though we are completing before time, but yes. Another thing is Fibonacci. So you'll be checking those things because this session was not that much technical, was just psychological, was perspective change. So these things are going a bit technical, but you'll read, they are very clear because I know people are experts. People know things now, know charts and all the stuff. So this is not new thing. So, but that is how we expected. So the right look in the Forex market refers to, now the overview now refers to key trading principles that emphasize on proper chart analysis. You see, so we have the checklist here. It is like principles that will guide you to open a trade. So if these are the checklist for the right look, so it means these are the principles that will emphasize for you to properly understand the market before you take trades. So now the proper chart analysis, what is that? A proper chart analysis now involves systematically studying price, studying price systematically to identify chart patterns, to identify the candlesticks. So is now when you are saying you are properly understanding the market or analyzing the market, it means you just do the analysis systematically, procedurally. That is very key. Okay, so now the right look is not about seeing more. We cannot say, okay, if now you know the right look of the market, it means you see more than others. No, you just see the same thing, but you see it in a correct way. You see it without being biased. So now the perception, what is the perception? Because we have been speaking about the perception that affect the market look. So perception is how your mind correctly organizes price charts into meaning. So now how your mind organized, that's why we said the illusion is all about mind misinterpreting the information. So when we now come into changing perception, it means now you're changing the way your mind understands things that are seen on a chart. So that is very, very important. So that is all about this session, and thank you for your time. For any questions or anything, you'll be writing anywhere now in a comment section or anywhere. So you'll be writing those questions, and now they will be answered. And we have managed time now 34 minutes, but the expectations were like 45, so we are on time. So thank you, and we are going to end up here, and we'll meet again next time on our Telegram channel. We are very active, and on other platforms, so we'll be able to meet again there. So make sure you visit our website. It's here. You can do many things here. The email is here if you want to contact me, and yeah, we'll be connecting there. Yeah, so thank you and have a powerful time and a successful 2026, because this is a preparation for 2026. So I wish a successful 2026. Thank you.